What's going on, everyone? I hope you all had a nice and relaxing weekend because we are set for a crazy week in the markets. On Friday, we saw some of the biggest and baddest companies out there have their biggest drops since the COVID crash, and this week is set to be another crazy one as we have earnings season in full effect. We have some big stocks set to report. We are already seeing crazy movement from the market on Friday, and there's going to be a whole lot of opportunity involved in the market this week. And what we're also going to be doing in today's video is looking back at about 75 years worth of market data to see what the market has done in past situations like this one. If you were going to watch one video to the end this week, it has to be this one. We have a lot to talk about, and there is a lot to know. As you can see by looking at the heat map, it was a bloodbath on Friday. So, Tom, let's jump right into it.
Yeah, it was one of the worst days that we've seen in a long time, and I couldn't believe that I saw this many stocks green, but you can see like where the bigger stocks in the market are. The heat map does a really good job of showing this as the bigger blocks, make more of an impact on the S&P 500. So you can see that based off of these tech stocks and the way they move Friday, that's more of the big reason why the SPY fell. And some of these bigger tech stocks like NVIDIA, like you mentioned, had a historic move, down 10%. That's the biggest move since the COVID crash, like you said. That is terrible there. SMCI was down 23% as well. So, Mike, we're seeing a lot of the big tech stocks sell off, and I don't want to be that guy that sits here and says, like, I told you so or anything like that, but we've been preaching this over the past few weeks that the price action has been changing. You can look at the price action on the whole entire uptrend. It does not compare to, like, the chop that started a few weeks ago and the downtrend that is starting now. Even, like, the little pullbacks that were pretty harsh on the way up were nothing like we see at the moment. So it's a pretty big move, Mike. I'm going to definitely keep my eyes on these big tech stocks. And there's a plethora of reasons why this happened on Friday. To me, I think it's mainly valuation. They're just way too overvalued, but there's a lot of euphoria out there, and that snowball effect starting to happen in the wrong way now, unfortunately.
Exactly. So, like you said, there are multiple reasons why this is happening. All of these chip stocks have been trading at some very aggressive valuations for some time now. And, in order to sustain those very aggressive valuations, you have to keep pumping out, jaw-dropping numbers for investors. I mean, look what we saw with Netflix last week on their earnings report. They had good earnings, and the stock fell by 9% on Friday, right? There was more to that report, but it's like, you can report good earnings in fall, right? But like when you're trading at such an aggressive valuation, you really have to post some jaw-dropping numbers. So ASML and TSM are two chip stocks that reported earnings last week, and they both fell. And, it's not like their earnings were like bad by any means, but they just weren't good enough. And then another thing worth noting is SMCI, the stock that you just mentioned that was down over 20% on Friday, skipped its pre-earnings announcement. So if you read in between the lines, that's clearly not the best sign when they have, historically, pre-announced their financial results. Like, what are you hiding, right? So that definitely wasn't a good sign, and investors clearly showed they didn't like that news as the stock got hammered on Friday. And then on top of that, ARM, another chip stock, got downgraded. And then, to piece everything together, when you have chip stocks or any stocks out there just going up like day after day after day, and this happens for, over a year, sometimes pullbacks are just expected and normal, right? So there's a lot of things going into play here, but one thing that's for sure is that when you have stocks that have been up so much, like NVIDIA, like SMCI, like ARM, and all these other ones, people get too euphoric, and people get greedy, and they over-leverage themselves, and they take out margin to buy shares. So as soon as the stock starts to fall, all the people who are way over-leveraged get their positions force-sold, and that makes the stock fall even more, and then, that puts pressure on other people who are long, and then they start to sell their shares, and it's like this giant snowball effect that, causes what we saw on Friday, right? And with all of this being said, when you have situations like this, you can either, I guess you could say, fall victim to a move like this, or you could take advantage of it. And one of the craziest trades I've seen in a while was this Wall Street Bets trade with apparently a trader put $800 into some NVIDIA out-of-the-money put options, and by the end of day on Friday, he had his account worth like $100,000. So that was one of the craziest trades I've ever seen. He turned like an $800 account into 100,000.
Man, Mike,
Jeez.
I almost don't even know what to say to that. Like, just to see that you could make, $800 into 100,000 within one day like that is pretty insane. And that just goes to show you guys how many opportunities that there's going to be to the downside when these downwards moves start happening. And we've been talking about this a lot, saying that the volatility is going to start increasing, and that's going to be great for options traders. Now, of course, it's not going to be great for all options traders, right? Like, if you're not adapting and you're still stuck to the upside right now, well, I hate to say it, but that's the name of the game, right? If you're an options trader, you need to be adaptable out there. I get it if you're investing long term and etc. It's pretty good to be bullish all the time, but as traders, we definitely need to adapt, and that's a pretty cool chart, Mike. I mean, I know that most people out there aren't gonna make 800 into 100,000, but that's one hell of just a good example as of the volatility of some of these moves that we're seeing here in the short term.
No doubt. And one thing I want to be clear on is yes, it's awesome to look at examples where people turn $800 into 100 grand, but those situations are pretty extreme to say the least, right? But looking at the market right now, the biggest lesson, the biggest thing to take home is to be adaptable and also just put yourself in a position where no matter what happens, you don't have too much risk on the table. For example, there are people who are holding these chip stocks right now, and maybe they're holding them for the long term. And while there's a lot of bearishness and selling pressure coming into them, if they hold long enough, they'll probably be fine. But the people who won't be fine are the people who over leverage themselves and open themselves up to too much risk, right? So it's like whether you're bearish or bullish or no matter what stocks you're looking at, make sure no matter what happens, you have your risk at a reasonable level. And at least in terms of short-term trading, you have to adapt because market conditions are changing. That is a fact, and I think that's especially obvious now. We've been saying this for weeks now, but I think Friday really cemented that into the market, right? Be willing to adapt. This does not mean the market's going to come crashing down tomorrow, kind of like it did on Friday. But what it does mean is that whether we see a bounce over the next couple days or whether we see a continued sell-off, you have to be willing to adapt with the flows. And that's the most important thing, especially going into this week, given everything else we have to cover for the lineup.
Yeah, exactly. That lineup's going to be fun, but we do have one more thing here, Mike, with Tesla here. Unfortunately, Tesla having a pretty bad day on Friday too, down 1.9%. And as we go ahead and we look here, I mean, this is one of the largest drawdowns that Tesla's had over the previous 10 to 20 years. It looks like here on the chart. The biggest one was previously back in September 2014 to March of 2017, where their drawdown lasted for 939 days. Right now, we're at like the 896th day, and based off the way it's going, I don't know, Mike, I would bet that we end up breaking the one from September 2014, but it's a terrible time right now for Tesla. We've talked about a multitude of reasons over the past few weeks why that is, but it's definitely an interesting chart just to see that it's getting close to that short-term record there.
And looking at Tesla right now, it has been very, very weak in the short term, and it's going to get even crazier as this one reports earnings this week, along with a lot of other big tech powerhouses. So Tesla's going to report after the bell on Tuesday, along with Visa and Enphase, but we have a loaded week. We have Boeing, Meta, IBM, Ford, Chipotle, and others on Wednesday. And then Thursday, we have Microsoft, Google, Intel, Snapchat, Roku, among even others. Then on Friday, we have some of the oil stocks, so we're set for an exciting week.
We really are, Mike. I mean, this is a loaded one, and I'll say this, we even have some of the pretty crazy stocks in the short term reporting too, like Tuesday before open, Lockheed Martin's going to be reporting. That's going to be interesting, along with RTX. A lot of these defense stocks started moving pretty well on Friday, kind of inversing some of those tech stocks there, and then even some airlines like Southwest will be interesting. So it's a pretty big week, Mike. Now, Mike, I hate to even ask you this question because I think I already know which one your favorite's going to be. Probably Meta, right? Am I right there?
Yeah, I'll give it to you, and I want to clarify, though, because some people will hear that and think that it's automatically bullish, which is not necessarily true. So far, this earnings season has definitely been more bearish than bullish, but I'm very curious to see what Meta does here after its historic run ever since, you could say, November of 2022.
Yeah, they're going to be a very interesting report. Like, I got to actually say, that's my favorite one of the week, too, just to see what they do. I think will be one of the biggest ones out there. But I know everybody's going to be looking at Tesla on Tuesday. And I don't know, Mike, based off their last deliveries, how they missed, I'm not too bullish on this Tesla earnings. But, of course, guys, watch it be. They'll have terrible earnings or something, and the stock will move up with some weird comment. Or, who knows? These earnings have been kind of wild lately, kind of like TSM last week. They reported pretty well and ended up falling. So, pretty weird situations lately.
No doubt. And Tom, while we're talking about earnings, guys, let's trade smart this week. Everyone out there just likes to gamble on earnings, whether it's calls or puts. But guys, there's no need to do that. Let's trade smart instead of trying to gamble and buy some way overpriced options on an earnings report. Save the money and deploy it with a better opportunity. Trade the move after. Don't get greedy. Don't play earnings. So many people try and do this, and you might as well go to the casino if you're going to play earnings. It's just not worth it. So save yourself some money there. And then, Tom, let's also talk about the seasonality at hand. So looking at this chart right here, we can see in the red line, we have the stock market performance so far this year. In the black line, we have the stock market performance for all election years. And then in the green line, we have the top Q1 election years, in the market, obviously. So far this year, the market has been following that green line. Whether you look at the top election years, which is the green line, or you look at all election years, which is the black line, the market does tend to slow down during this period. So between April and May, the market doesn't do all that great. So that's just another thing worth keeping in mind.
Yeah, and of course, look at this. The market literally started falling almost hand in hand with that top Q1 election year line there. So just to see that playing out this way so far is pretty interesting. I'll definitely be watching it, though, as we get maybe towards June, July, August, maybe for that uptrend to start to continue with the historical data. But as we know, historical data doesn't always mean that the market's going to move that way. But it is cool to always look at the seasonality and see what exactly is going on. But of course, just realize that what the Federal Reserve and stuff does might be different than other years.
Yep, no doubt about that. And Tom, let's jump back to the market overall right now. So it's down by around 5.7% from its high. It's in a pretty decent pullback right now, but at the same time, it isn't anything jaw-dropping, right? Especially given how much it is up over the past couple of months. SPY is back below that $500 level, which has been a big point. So what are the next most important levels to watch?
Yeah, so what I'm really looking at here on the chart is there was actually a lot of price action right around this 490 to 495 area. And, you can see a lot of wicks right here where 494, 492. This was a pretty big chop zone right around this I would say 492 to 495. You can just see how much bounces there was there previously. So I'm going to be watching this area carefully as a bit of a chop zone. And considering how much the market fell lately, I almost wouldn't be too surprised if there was a bounce off of one of these supports. One of the more major levels I'm watching down here is 490 and 491, kind of the bottom area of that range. So if we do see a bounce off of that, then I'll obviously start to adapt a little bit, maybe look for some chop for a couple days. But in the short term, I really want to see a good move under 494, which is the low of Friday. And of course, just continuing to trade that momentum and getting in on those good momentum filled moves, right? You don't want to get stuck in the chop zone with SPY. You want to get on those bigger breakdowns. So I think if we break 494 next week, we could definitely see a bigger breakdown. And for resistance in the short term, it's pretty awesome. We just fell under 500. So I'm going to be watching 496, 498, and then 500 overhead.
All right, sounds great. And just another thing worth noting, if we go back to the heat map for 1 second, what you'll notice is that, okay, yes, the market fell on Friday, clearly, but 67% of stocks in the S&P 500 actually closed in the green. So that goes to show you that a lot of the movement we're seeing right now is really attributed to these big tech stocks like Meta, Microsoft, Nvidia, Amazon, Tesla, Netflix, and others. So it's look at those big tech stocks to really see what the market is probably going to do, because those big tech stocks have a bigger influence on the market than, all of these other companies that you see on the heat map. So remember, big tech is, running the show right now.
Yeah, it really is, Mike. And whenever I'm looking at a lot of the big tech stocks, I mean, it's getting pretty freaky. Like a lot of them are starting to break pretty key resistance. And we'll talk about Microsoft in a little bit more. I should say support though, right around $400. It started breaking that last week. That's a big spot. I know Tesla has recently fallen under $200. And when I say fell, Mike, I think I'm saying that I'm giving it the benefit of the doubt, right? Like it got killed under 200. Now it's at like 146. So, and it's not just them. Even Nvidia, they couldn't get back to that that key $1,000 area again. I know a lot of people were looking for that. Did not happen. All the way down to 759 now, and these moves are becoming pretty extravagant. So I'm definitely going to be watching for the market and these big tech stocks, Mike. I actually have a chart set up on Thinkorswim, which is pretty cool, and it has 4 of the big tech stocks. And I'm always watching that throughout the day, nonstop with those tech stocks, and of course, charts other places too, but that's the main one. Nvidia, Apple, Microsoft, AMD, Meta. You can't go wrong by watching those.
No doubt about that. All right, Tom, well, let's get into some setups for tomorrow. A stock I'm watching pretty closely is a stock you can probably already guess, and that is SMH, and it's to the downside. Essentially, this is a bunch of chip stocks all in one, and it has been getting hammered over the past week, as you can imagine. I'm still looking at it to the downside, but this does not mean that it has to fall tomorrow, right? These chip stocks have been getting hit pretty hard over the past couple days, and it is possible that there could be a pop up in the short term. But the way I see it, there's many more bearish flows related to these chip stocks than bullish flows, and I can see the downtrend continuing even more over the next couple of days. But I'm looking at it in a bearish way, but this doesn't mean it has to go down tomorrow.
Yeah, it really doesn't, but I'll say this, there's a lot of volatility and a lot of good downside action right now, so that's a good sign, but I'm definitely a little bit worried about a time of consolidation. It doesn't necessarily mean the stocks are going to run back super hard, but we might see them start to just go flat a little bit or etc., especially at these big levels like $200 here. So I'll definitely keep that in mind, Mike. And with my first play, I'm looking at ExxonMobil. I'm starting to look at these oil stocks off this recent dip they had. They dipped down to 118 in Exxon's case, and I really like that price action from Friday. So if I see a good move back above $120.50, I'll go ahead and look at calls back to the upside. I want to see oil start to get that good movement again. They had all that hype with the Middle East conflict, and I'm kind of looking for it to start to move up again here in the short term.
All right, sounds good. Another stock I'm watching pretty closely is WBA, and it is to the upside. So this one had a pretty good day on Friday as it moved up by just under 4%. We've seen a handful of big money plays with this one over the past couple of weeks, and obviously that's always a great sign to see. But Tom, how about we go back to an intraday chart on this one? Can you ask for better upside price action? Seriously, you really can't. There was no pullback at any point throughout the day, and it was just a lot of buyers flowing in all day long. So I'm going to continue to look at this one in a bullish way in the short term.
Yeah, it might not be up 10%, but I'm a big fan of just looking at the charts most of the time. Even if a stock only goes up 2%, sometimes you can still get some amazing moves out of there, especially if the chart is as consistent as this with a stock like Walgreens. I mean, 3% is not really a low move for this one either, with the average move being 1.4%, looking pretty good here. So I love that one with Walgreens, Mike. I'll keep it on the radar, especially with the big money plays. And I know last week we talked a lot about Microsoft at 400, and I even hinted on it earlier in the video tonight. We're looking at this one on the book map. So on Friday, $400 was huge, and that's actually been a big stack on this chart for a long time. If Microsoft can stay under $400 tomorrow morning, and then we start to see it break under $398 again, I will go ahead and look at puts back down. Now, just realize that if the market gaps up in the morning or we see SPY running up, then these downside moves might not be the best thing to do. But if we do see a good break and you see momentum coming in, then go ahead and look at it to the downside. These tech stocks have been starting to fall off in a pretty good way, but we've been watching this level a lot on Bookmap lately, so I wanted to hit on it again, and it's just such a big level to break in the short term, and there's so many big tech stocks doing this at one time.
There we go. All right, well, let's get right into today's momentum plays. And with the first one, we have Netflix to the downside for an earnings continuation.
Yeah, that was a pretty bad move last week, down 9%. If they can break under 548, just under this 550 support, then eye up the puts.
All right, with the next one, we have Zoom to the upside.
Yeah, ticker symbol ZM looking pretty good here short term. Go ahead and make them break above $60. That was a pretty big support there. That is now resistance, of course. I don't want people to get confused with that.
There we go. All right, and then with the last one, we have BABA for both directions.
Yeah, Baba's been kind of stuck here lately. If they could end up breaking out above 69.30, then I'll go ahead and look at calls up. If they break under 68.80, then look at puts. I like that support at 68.80.
Awesome. All right, so we have the downside level for BABA. We have the upside level as well. Don't forget about the upside level with ZM, and then the downside level with Netflix or NFLX. These three stocks are on watch for potential day trades tomorrow if and only if they break through the levels Tom listed. For the upside plays, we're looking for breaks above the levels and continuations higher. And for the downside plays, we're looking for breaks below those levels and continuations lower. We want strong, powerful, consistent price action. That's like what makes for a good momentum style trade. So keep a close eye on these three stocks, but let's jump right into today's big money trade of the day. And we are looking at ticker symbol LLY. So the big money put around $438,000 into the LLY 655 strike put options that expire on May 24th of 2024. LLY is one of those stocks that have moved up a lot with the weight loss euphoria over like the past year. And it's one of those stocks that is just very overextended, right? And it's starting to see some of the selling pressure that we're seeing with some of the chip-related stocks right now. I would not be surprised at all to see LLY fall lower, but I am a little bit concerned with this strike price. It is the 655 strike put, which is kind of far out of the money, and the expiration is kind of soon as well. It's like only about like a month's worth of time. So I like the setup, but I want to emphasize this a ton. It is definitely riskier than most setups, mainly due to how far out of the money this put option is. So, it has potential, but it's definitely risky.
Yeah, it really is. The LLY 655 puts, that's a pretty crazy strike here in the short term, but I noticed that there's actually a big support here, and we've been seeing these quite a bit in the short term start to give out, but I've been watching this 725 area on LLY. There's been quite a bit of hits on that over the past, I'd say, few months. Obviously on the way up. If it does start to really truly break like back below 720 come up Monday or Tuesday, then I would think that this could be a good short-term play here. You don't have to hold this one forever. It only expires in like a month. So keep that in mind too. If we just get a couple good days, that could be a pretty good move on this on these options here, especially considering how far this strike is. But definitely be careful with that strike. I would say like if I was to play it, Mike, maybe even almost go with the 700 just to keep it a little safer.
Good stuff. But, Tom, we are set for a very exciting week, whether we're looking at the market overall or some of these chip stocks or the giant earnings lineup or anything else. We are set for an exciting week. But at the end of the day, what matters more than anything else is to trade smart. Keep those position sizes light. Have stop losses in place. Don't over leverage yourself. Don't get FOMO. Let's trade smart, follow the money, adapt to the market, and let's make this week a great one. But that starts with good trading habits. It is so easy to look at, let's say screenshots of that $800 to $100,000 trade from Friday with NVIDIA. But none of that is possible without, just trading in a smart way, right? So keep that in mind. Trade smart, and let's have a great week. If you guys have not already checked out the StockedUp trading floor, Friday was insane. That's all I'm going to say. So SurgeBot hit it out of the park. It called out some SMCI put options at like $3,800 each. And by the end of the day, they were trading for almost $15,000 each. It was a grand slam. And SurgeBot, while SurgeBot did great, SMBot kind of did even better as some of the NVIDIA put options popped up by 700%. Some of the ARM put options popped up by 500%. And it was just an all-around great day. So if you're looking to talk with Tom and myself all day long, get full access to our army of trading bots, join our live events, and access to big money plays on the same day they're made, among many other things, check out the first link in the description in the comments down below. It is the place to be if you're into short-term trading. And we do have a coupon code running. Use code BIGMONEY to save big with the yearly plan. And we don't do sales very often. And Tom, while you're in the Discord, let's give a giant shout out to today's member of the day, which is Elijah V, who just had a great day on Friday. So you've been a great member of the community ever since you joined, and keep on rolling. I love these screenshots.
Yeah, that's an awesome one. Nice 10% gain there, Elijah, and just great job to everybody Friday. You know, it's a pretty clear thing that a lot of people have been adapting, Mike, and hopefully these videos have been helping you guys. If they have, definitely let us know in the comments and smash that like button. It really does help us out. But yeah, let's go. That was a pretty awesome day Friday between all the price action, all the big plays in the profits channel, the plays by the bots. Like, it was a great time or great day to end the week on, right? So let's hope that we continue to see this good volatility and price action in the short term. I do want to say on the economic calendar, there's durable goods orders Wednesday. Thursday, we have the GDP growth rate, and then Friday, there will be PCI data and personal income data, or PCE data, I should say. Don't want to missay that. That one's going to get me in trouble, Mike. But we'll hit on this a lot more as the week goes on. But for now, just keep focusing on that good price action, and don't forget about those big earnings this week.
No doubt. And if you're new to the channel, consider demolishing that subscribe button to get our videos recommended to you more often. But besides that, let's have an amazing week in the markets.